We're doing it. Extra credit cards. We're chatting about credit cards and covering every juicy detail. As opinionated as I am about the credit system, you may be surprised by my answer to the question, should you have a credit card? It's a fair question. And for a fair question, I have a fair answer. You don't have to. However, I'm not opposed to it if you do. In fact, in some cases, I'd encourage it. Once again, this depends on where you're at in your financial journey, and we'll run through some scenarios to get a better idea of what it depends on. But first, we should understand what a credit card is and how they operate. What are they? What is a credit card? When you spend with a debit card, it's money coming out of your personal checking account. When you spend with a credit card, the money is coming from whomever your credit card is issued from, albeit your bank or a credit union. Then if you don't pay the balance back in full at the end of the month, you'll be charged interest on that money. After all, you did borrow it. Many people view credit cards as being lent free money, which I disagree with. Anything that comes with a condition is not free. For example, you can spend this money as long as you pay it back in full. Otherwise, you'll be crushed by interest, and we'll do our darnest to make sure you have a harder time buying a home down the road. That doesn't sound like free money. It's not free money. It's money you will always have to pay back in full by the end of your billing cycle, or else you'll get punished. You should receive a written statement. Most cases, it's now an e-statement for when your credit card billing cycle ends. If you don't know when your credit card billing cycle ends, you should call your bank or your credit card company immediately so you know when to pay back and avoid interest. So this is how I use credit cards. It's not a strategy many take. However, I recommend you do the same. That's helped me responsibly use credit cards. Pay off your credit card immediately after you purchase something. As soon as the purchase registers with your bank or wherever you pay off your credit card, pay it off. Pay off the entire balance. This is the ultimate strategy to ensure you are using your credit card like a debit card. At a minimum, pay it off in advance of the entire balance due date. Most credit cards, mind you, this is a blanket statement and varies from credit card to credit card. For most credit cards, you'll need a credit score of 600 and an annual income of $15,000 in addition to a debt to income ratio below 36% to qualify for one. And I'll explain what a debt to income ratio is in a moment, but I want to make sure to take a moment to say, do not borrow any money to try and raise your credit score. Don't ever do that. Never do that. We are never, ever borrowing money ever again, and we are sure as heck not doing it to raise our credit score. Don't forget, net worth over credit score every single time. Every time. So let's do the big four. Big four in credit cards. This is my personal take on what the big four is. The first of the four is billing cycle. Billing cycle is the invoice cycle that keeps track of your spending. This is usually about a 30-day period, and it starts over again. Basically, after 30 days, your credit card company is going to hit you up and say, hey, this is how much you owe us. So pro tip, here you go. Call your credit card company and ask for your billing statements to start at the beginning of the month. That way it simplifies things, keeps things easy, right? If your billing cycle currently starts on the 15th or some other point in the middle of the month, I'd call them up and I'd ask them for it to be moved to the 1st. So the only thing you'd have to worry about is the 1st through the 30th. Keep things simple. Once again, though, if you're like me and pay off your credit card after you've bought something, this doesn't make a huge difference. Next, statement balance. Once you've used your card and you've gone through an entire billing cycle, you'll end your cycle with a statement balance. Your statement balance is just how much you owe from the billing cycle. From there, you'll be given a due date that is generally between 21 and 25 days after the billing cycle is ended. And as long as you pay your statement balance in full by the due date, you won't pay any interest on that credit card. I'll say that one more time. As long as you pay your statement balance in full by the due date, you won't pay any interest on that credit card. If you don't pay off every penny on the statement balance, you will start to incur interest, which we want to avoid like the plague. So let's say you owe $500 on your statement balance. You just need to pay off that $500 by the due date and you'll be chilling. You don't have to pay it off all at once. You can make multiple payments as I suggested, but you must pay it off by the due date. You must do this. This is the big must. You must pay it off, the entire thing, the entire statement balance by the due date. Next in the big four, grace period. This is an interesting one. This is a fun one. Grace period is another important component to understand. Your credit card may not have a grace period associated with it. And this is something to call your credit card company to find out about, as it affects the interest you'll pay. So the grace period is between the billing cycle's closing date and your credit card's due date. And I'll say that again in a different way. The grace period is the time between the date you're billed for what you've spent and the date your payment is actually due. Most often, this 25 days, however, the minimum amount a grace period can be is 21 days. That's by law. If your credit card company offers you a grace period, the minimum amount of time they can hold one for is 21 days, but typically is often 25 days. During this time, you will never pay any interest on your statement balance or new purchases that you've made. It's a grace period. If you pay off your entire balance within the grace period, you won't incur any interest charges. The game changer is if you carry a balance on your card, you do not have a grace period. You don't. If you didn't pay off your statement balance in full by the due date and you are beginning to incur interest, you lose that grace period. Got it? There is no grace period on new purchases, so interest starts accruing from the very day you purchase something. That's if you have a balance that you are supposed to be paying on. Big four of credit cards, outstanding balance. Outstanding balance is the accumulation of everything you owe. It's the amount you have to pay in order to get to zero. So if you owe $1,000 on your statement balance, you have 25 days to pay, as we mentioned. Within that 25 days, let's say you spend another $500. Your outstanding balance would be $1,500. Don't get this twisted with the statement balance. Your statement balance would still be $1,000 in this scenario. The only thing you have to pay off would be your statement balance in order to not be charged interest. That $500 would be charged towards your next statement balance. You can pay off your outstanding balance too if you want to, the entire $1,500 in this example. However, it's not imperative like the statement balance to not be charged interest. Cool? Outstanding balance is just everything you owe. I feel like that makes sense. Let's do concluding thoughts. I got a lot of them. Concluding thoughts is when you spend with a credit card, the money is coming from whomever your credit card is issued from. Then if you don't pay the balance back in full at the end of the month, you'll be charged interest on that money. Boom. Next, do not borrow any money to try and raise your credit score. Don't do it. This is a must not do. Do not borrow any money to try and raise your credit score. Billing cycle is the invoice cycle that keeps track of your spending. This is usually about a 30-day period. And your statement balance is how much you owe from the billing cycle. It's what you have to pay. The grace period is between the billing cycle's closing date and your credit card's due date. Not all credit cards offer them, but a minimum, they have to be at least 21 days long. Now, outstanding balance is the accumulation of everything you owe. And we covered a lot in this one. Keep it up. We'll see you in the next one.